Could spring of 2025 finally be the point in time where GTA home buyers get the upper hand in the real estate market? The Toronto Regional Real Estate Board released their Market Watch report for February today, and the early trends and numbers for active listings and reported sales numbers are promising for those looking to purchase a home in the future. Hey, if you're new here, my name is Rob Marsiglio. I'm a realtor out here in the Greater Toronto area. Each week on this channel, my goal is to break down all the latest stats and numbers about the Greater Toronto area real estate market. So if you get value out of that kind of content, consider liking the video and subscribing to the channel. Today, we are going to dive into TRREB's Market Watch report. We're going to look at the summary and then dive a little deeper, breaking things down by freeholding condos, looking at how this year compares to past trends. We'll also look at municipalities. We're going to talk about your town specifically. As promised, let's get into this year-over-year summary from TRREB's Market Watch for February. This compares February of 2025 to 2024. So you can see that sales numbers are down 27.4%. New listings year over year up 5.4%. That active listings number, check that out, up 76% from the same time last year. Average prices dipped a little bit by 2.2%. Our listing days on market is up 12%, and our property days on market is up 16.2%. To start things off, we'll take a look at what a normal year looks like, what the trend is for sales, new listings, etc., and compare where we're at this year as well as where we were at last year at this point in time. And here's what I mean by that. Reported home sales across all property types as for TRREB Market Watch. The black and red dotted lines are how the average and median year plays out. So you can see we'd expect sales to peak out in May for any given year, another little peak in October. This year, we're off to a pretty flat start with sales reported hovering right around that 4,000 number for 2 months in a row, being January and February. You can see this jump in the year-over-year gap between the 2 years, 2024 being this blue line, 2025 being the orange line. New listings seem to be converging on kind of the average and median year. You can see that people came out of the gate pretty hot in 2025, looking to relist those properties that they couldn't sell at the end of 2024. So a lot of new listings in January. We were well above the trend line, but now everything is kind of, like I said, converging on that point of where we'd expect to be in any given February across the Greater Toronto area. Active listings are another story, though. You can see that we started high, just over 17,000 active listings in January, and we've jumped to just over 19,500 active listings, when usually we'd expect to be hovering around this 13,000 number, just high 12,000s, low 13,000 numbers is kind of the average or median year. Last year, we had a super tight inventory market at this point in time. Here are those active listings for February's presented in a bar chart. You can see 19,536 active listings, the massive jump that we've seen really from any year going back to 2009. We are significantly above trend right now as of the end of February. But it is important to note that there are some key differences between the market right now and where we were at in 2009. And I highlighted those differences in this tweet earlier on. So in 1 year, we've gone from relatively tight inventory levels to highs that we haven't witnessed since 2009. This year, though, condo apartments account for 39% of the active listings. And in 2009, condo apartments made up about 23.6% of those active listings. And I touched on this in last week's video, how I feel like the condo market is a different factor in this market correction than we've seen in previous market corrections. More assignments flooding the market, making up a much bigger share of active inventory. I really think it's that segment that is going to be hurt the most in the early days of this correction. We can see what happens with freeholds as time goes on. The last trend that I want to highlight is the sales as a percentage of new listings. You can see that the higher this number goes, the stronger seller's market it is. The lower this number goes into buyer's market territory. And usually they talk about a 40 to 60% band as being balanced. So in an average year, the majority of the year is spent in that balanced territory and then goes up into more stronger seller's market near the end of the year as fewer people bring new listings to market, but it takes a little longer for sales to fall off. In 2024, you can see the blue line, we were kind of right close to trend, what we'd expect to be. It was dipping, not increasing from January to February. But this year, you can see we're well below the trend line and putting us strongly in that technical buyer's market territory, at least by this metric. Those are the activity numbers that I want to dive into trend-wise. I also want to touch on prices, though, and what those did. They did highlight on the TRREB Market Watch report, down 2.2% year over year. When we pull back a bit further and look back the last 10 years at what the benchmark price has done, here is how things have performed. Starting at around $600,000 back in January of 2016, we are now up just shy of $1.1 million. You can see there was a little bit of an edge up from January to February of this year, not as much as January to February of last year or the year prior. And that's what I want to showcase on this one last chart about prices. So you can see the benchmark price from January to February of 2025 jumped by 0.36%. Compare that to the median jump of 2.54% and the average jump of 2.8%. It's kind of closer to what you'd expect to see at this time of year. Pales in comparison to what we saw through 2020 to 2022, where we saw jumps anywhere from just over 3% to about 5.5%. And again, the biggest jump that we've seen was in 2017. Prices in that month jumped about 5.9% from January to February. So more active listings to choose from, fewer sales, meaning less competition, and sale prices don't seem to be running away like they have in previous spring markets. All good signs for GTA homebuyers, in my opinion. But we all know that the GTA homebuyer is not shopping for the market at large. They're looking at condos or freehold properties. That's what I want to break down a little bit in this next segment. Starting with our reported sales in February. This is every year from 2008 to 2025. Freeholds are the black bars and condos are the red bars. Our slowest February in terms of freehold sales going back to at least 2008. And on the condo side, it was our slowest absolute sales month since 2009. But when you look at those sales numbers as a percentage of new listings, you can see that 2025 was the slowest on both fronts, with sales as a percentage of new listings coming in at 34.48% on the freehold side and condos coming in at 28.63%. And again, as a little bit of a refresher reminder, below 40% puts you into buyer's market territory, which is where both of those numbers are firmly sitting right now. To wrap the video up, I want to do a bit of a geographic breakdown now because again, you're shopping for a freehold or a condo property, but you're also looking in a specific market. So how is each region of the GTA performing? Then we're going to break it down by municipality in terms of year-over-year active listings, jumps, and year-over-year sales declines. Let me know in the comments below where your city ranks. Let's kick things off with a regional breakdown. So this is our 2024 to 2025 February active listings jumps. Toronto active inventory has gone up 38.73%. Unsurprisingly, this is largely driven by the downtown condo apartment market. We saw the biggest absolute jump in active listings in that segment. Durham region, we see active inventory up 45.15%, and York region up 47.53%. Halton region, we finally get over that 50% mark. It's up 50.35%. And Peel region, far and away the biggest jump in active listings, up over 60% at 60.62%. So it's not surprising really when you see Brampton leading the charge in terms of GTA municipalities. Active inventory in Brampton is up almost 80% year over year. Markham up over 70% year over year. Then you have Milton, Oshawa, Richmond Hill, Oakville, Pickering, Ajax, Mississauga, and Vaughan to wrap out our top 10. On the lower end of the scale are some lower volume markets. Brock, East Gwillimbury, Halton Hills, King, and Georgina are all up less than 15% year over year. But pause the video here to take a look at where your town ranks. And like I said, let me know in the comments below. When it comes to reported sales numbers, this is per the Habistat again. You can see that Halton region sales are down almost 50%, 49.33%. In Peel, we're down 38.67%. In York, down 32.69%. Toronto, down 27.24%. And in Durham region, sales are down 24.94%. Our last municipal breakdown comes with the year-over-year sales percentage. So Halton Hills down just shy of 60% when it comes to sales year over year. Aurora, Milton, Stouffville, all down over 50%. Then you have a group of these regions down between 40 and 50%. That would be Oakville, Brampton again right there, Scugog, and Burlington. Kind of our best performing market compared to last year, relative to last year, would be East Gwillimbury, where our year-over-year sales numbers in February did not change at all. They came in flat. So after looking at all these charts and trends, are you coming to the same conclusion that I am, that the spring market is shaping up to be a pretty decent one for buyers? The spring market in the GTA has always been synonymous with seller advantage. People wait to list their homes in the spring because they show nicely. Buyers get back out there, and that's usually when we see prices start to run up, but just not seeing the signs of it this year from prices or from all these underlying market activity markers, there's just nothing really indicating to me that prices are set to take off. Big wild card, as always, has been these tariffs. This week has been wild in terms of tariffs. As of right now, when I record this, tariffs are on. By the time I post the video, they could be back off, and that's going to have a big effect on buyer sentiment for great reasons. Unemployment rate is going to be very affected by this. Inflation is going to be very affected by this. Cost of living is going to be very affected by all of this news. So a lot of unknown variables this year that could be putting a little bit of a hold on the spring market. But all in all, I do feel like things are trending in a better direction for buyers than they have been in quite some time. Before I go, if you did find this video valuable and useful to you, please don't forget to like it, subscribe to the channel so you don't miss anything going forward, share it with a friend who wants to know a little bit more about what is happening in the greater Toronto area real estate market. Thank you so much for sticking with me right through to the end of this one. Until we speak again next time, please stay safe and cheers.